Funny, I just posted in the IB on the Bloomberg terminal, hey, team, free cash flow so much higher. Why? Question mark. Answer from editors and other reporters. Energy storage? Question mark. That's to say, don't know. I mean, I've read so much of the deck already.
Well, I want to help us out, Ed, because Thomas Thornton over at Hedge Fund Telemetry sending an IB to me during the simulcast. He said, inventory cleared out with EV subsidies ending. That's why cash flow was strong.
Yeah,
was this about inventories?
Remember that the number from the third quarter, which was just shy of 500,000 vehicles, was heavily influenced by the expiry of the federal tax credit on consumer EVs. In part, Tesla did additional promotional activity around that. So, elsewhere on the bottom line, if it's EPS or other metrics, they've missed on part because of those factors, right? The discounting and other promotion they did. Inventory will be a factor. We've been tracking a build up in inventory that Tesla had going into that period. But remember, they also saw an inventory build up ahead of the cheaper Model Y and Model 3 Standard coming out, with some consumers holding off because they knew that some kind of product was going to be unveiled in the month of October. But what I would say is that when we talk about the bottom line broadly, Tesla is listing a very long laundry list of impacts here, ranging from tariffs, fiscal policy, R&D costs, the mix of vehicles they sell. But this isn't severe by any means, right? This is the market selling news, basically.
Well, what's interesting is both you and our Dana Hall on our live Tesla blog pointing that out. It is difficult to measure the impacts of shifting global trade and fiscal policies on the automotive and energy supply chains, our cost structure, demand for durable goods and related services. As you say, they are reminding everyone that the business, there's a lot of factors that are going to impact their business. I feel like they are managing, and maybe with some negative tone going forward.
Yeah, one sort of specific example is that when you introduce a new product and you have to install the assembly line for that product, there are downtime and installation costs associated with that. It impacts how you produce other products. That shows up in financials. In this case, they haven't really given us a big picture outlook for their growth for this calendar year, nor next year or going forward. They have told us that they are doing things like ramping the standard models of the 3 and the Y, and now they've installed the assembly line for Optimus, the humanoid robot. So I'm talking about in factories in Texas, and I'm assuming elsewhere down the line, they're like, okay, we've got to find space to build an assembly line here for a humanoid robot, and that will have an impact. But the way I've summarized it in the blog is there are 2 paragraphs in the deck that are explaining to us the macro environment is changing and fiscal policy is changing, and Tesla is trying to say we're kind of in transition here. Bear with us.
Where are those? I want to know what those. What is the transition that's happening right now? This is a macro, and this is the context too, Ed, is this is somebody who was very close to the president and was very close to, during the election, before the election, and then after the election for a good time as well.
Well, the direct answer is that tariffs have had an impact. They've listed it in the negative column on profit. So that's across both the consumer EV business and the energy storage business. As it relates to that free cash flow question, they do say in the free cash flow section of the deck that not only did they have record deliveries in that quarter gone, energy products were more higher volume. But policy is not really supporting that right now, at least not in the United States, right? So I think for them, it's just this idea that the direction of travel we were moving towards for sustainable energy, transition from gas engine or combustion engine to EV, it's not there right now. And what they explain in those 2 paragraphs is they're trying to invest into it. A lot of R&D costs for these future products are robots and robots.
Is there an appetite for that? Are they building a product that people want? I know that Steve Jobs famously was talking about building products that people didn't know that they wanted, but then ended up wanting them when they saw them. But do we need these humanoid robots? Is there a market for this?
So Elon Musk and Tesla are once again behind their prior forecast. If you guys remember, the original Optimus forecast was that by the end of this year, there would be meaningful volumes of them working within Tesla facilities. And that doesn't appear to be the case yet. The way that they are pitching it is a way that the rest of the humanoid robot industry pitches it, at least, which is that we have a labor deficit in some industries, heavy industry, agriculture, and that economically at a macro level, Optimus is going to fill that void. So to answer your question, Tim, they would say that the demand is justified or evidenced by the lack of labor in certain workforces. Whether a consumer wants to go out and buy one for tens of thousands of dollars, that bit we just don't have the answer to yet.